teenagers, you know.
You already are all full back to office, or how are you managing that kind of stuff?
No, partially. So I go to the office once or 2 times per week.
Okay.
Yeah, and the rest from home.
But this is an actual picture of the office.
Ah, yes.
Yeah.
Yeah, it does look like this. Yes. Yeah. Yeah. Okay.
Really nice. And you start flying or going to countries?
Yeah, actually, I go to Miami to Julieta in within a month. So yeah, I'm so happy because I missed it. I mean, I don't like my job that much if I'm only behind a laptop. Still a nice job, but the best part was to meet other people in other countries for me. Yeah, I've not done that for 1.5 years.
Wow.
So yeah, for me, it's very important to get that positive energy back to travel and meet people directly. So that's why if Julieta invites me, I tend to say yes.
Why not?
Why not? Actually, very happy, but I'll play it cool. So say, okay, why not?
And the restrictions are going down, or...
Yes, although the restrictions are down, but at the moment the numbers are not going the right direction. We see more cases. Luckily, not that many people in hospital,
Okay.
but the numbers are not good actually. But still, the directions are more loose, and we cannot want to go back to really lockdown. But we also need to be careful because the numbers are going not perfect at all. No, this is in all of Europe.
You're entering the winter.
Yeah, that's true. That plays a role too. Many people have the regular flu too. So they don't have COVID, but they have the regular flu. Yeah.
Yes, but I read that in UK they approve a pill.
Yes, I saw that too.
I think Pfizer has launched a new one as well.
Yeah, let's hope all these things work well. Yeah.
Yes.
Yeah, most people are fully vaccinated, like in your country. So that's a good thing. We have some people that don't want to do it, but most people they do. And like myself, I am very happy to have the vaccinations, and we need it.
Yeah.
Okay, I'm ready to go if you are.
Okay. One minute more, and we start.
Yeah.
Okay, so let's check if we are recording. Yes. Okay. I will switch a few minutes to Spanish to give an introduction. Bueno, vamos a aprovechar que ya se han ido conectando nuestros invitados. Les queremos dar la bienvenida a todos ustedes. Mi nombre es Federico de Marchis, soy asesor de Nobilis. Y hoy vamos a estar recibiendo en esta videoconferencia a Julieta Heinke, que es directora de Robeco para Latinoamérica.
Mil gracias, Fede, por la invitación. Siempre un placer poder compartir con todos ustedes todos nuestros pensamientos. Así que acabamos.
Bueno, bien. Julieta está basada en Miami, pero bueno, es argentina y habla muy bien el español y el inglés, así que nos va a estar ayudando un poco con la traducción en caso que sea necesario. A su vez, en pantalla tenemos a ED Verstappen, que es Client Portfolio Manager de Robeco y está basado en Holanda. Y bueno, hoy nos está hablando desde allá también. Les comento un poco de Robeco. Es una firma que maneja inversiones, es un asset manager, es un gestor de inversiones de primera línea, como les comenté, está basado en Holanda. Y Nobilis viene trabajando con ellos, con la firma esta hace mucho tiempo, porque tiene muy buenos productos y que nos han dado muy buenos resultados a nuestras estrategias, a nuestros clientes. A veces son tan buenos que no nos dejan invertir. Después, Julieta, al final te voy a preguntar un poco cómo es eso, cómo es la filosofía de cerrar los fondos, que es muy interesante aprender un poco de eso. Pero bueno, lo hacen por el bien de sus inversores. Hoy, un poco la idea que vamos a tener una conversación con Ed, porque Robeco tiene una filosofía de inversión para un sector de renta variable. Robeco maneja administra bonos, acciones, alternativos. Dentro del mundo de renta variable, lo que son las acciones, han desarrollado una filosofía de inversión muy interesante que está basada en las tendencias de consumo masivo, ¿no? Ese tipo de estrategia nosotros lo hemos incorporado, forma parte del menú de la estrategia de crecimiento, y bueno, y nos ha dado muy buenos rendimientos, y bueno, y la idea de hoy es conocer un poco bien la filosofía de inversión, cómo se basa, porque es muy, muy interesante para aprender y un poco abrir la cabeza en este horizonte. Vamos a estar hablando sobre cómo nuestros hábitos de consumo van cambiando constantemente y qué impacto esto tiene en nuestras inversiones y en nuestros portafolios. Al final vamos a dejar un espacio para preguntas y respuestas. Como siempre, pueden ir escribiendo durante la conversación y dejaremos unos minutos para evacuar las dudas. Y así que bueno, ahora voy a pasar al inglés, que de antemano les pido disculpas, que no es mi fuerte, pero bueno, Ed tampoco habla español fluido, está aprendiendo.
Muy básico.
Okay, Ed, thank you for being here.
Thank you.
Icebreaker, I will have to make the question that everyone has been doing to me, is if you are any relative of Max Verstappen, the F1 racer.
No, I'm not. I have the same last name, and I could have been relative because I'm actually from the same part of the country, the Netherlands, where he is from. But we are not really a family. But I'm happy that he is famous because now people know the name, and some people even can pronounce it nicely. Verstappen is very Dutch, but not real family. No.
Okay. But you're fancy as well.
Well, I drive very cautiously, I have to say. So I must admit I'm probably much more conservative in driving than he is. But he does fantastically. If you saw this weekend, amazing. Yeah.
Well, Ed, once again, thank you for being here and for joining us. I would like to make some questions to make a conversation. And as I was telling in the introduction to our clients, that you guys in Robeco have like a philosophy for investing in equities regarding consumer trends. So for starting and going down in these topics, I would like you to explain to us what a trend is and how you find a trend that is different for a fashion, and to tell us about if you can explain what is a trend.
Yeah, thank you. I'll use some slides, and I'm sure you see the slides too now. Please interrupt me anytime, and indeed, like you said, questions we can take also at the end. Before I explain what a trend really is, but it's maybe also good to show you a little bit on why trends work for investors. Because what you see here is that trends are really about structural change, not so much about the nervousness in the market that can also happen for investors, not so much about macroeconomies, although they impact what we do, but much more how is the world really changing for people, for consumers, for companies, and also for investors. And I'll give you one very easy example that I think everybody understands. If I look at my children who are now in their 20s, yeah, their life is very different than when I was young. For instance, because we have the mobile phones. That has had a big impact on life. So that is a very easy example of a structural change. And that has really impacted how companies make money, how we behave in our daily lives, and also which companies have been successful in the equity market. So we think that is the idea in the philosophy of Las Tendencias, that if we focus on what is really changing in the world, and we look at that from the longer term, that is fantastic, because that change can drive or impact the earnings growth of the companies that we invest in. So the trend is there not only because it's interesting, but also because it helps earnings grow for our companies. And we believe as fundamental investors that that is the most important thing. We want to buy companies because their earnings are nicely growing and attractive. And that's what we tend to do. And the graph to the right explains a little bit on where you have to be careful for. Because if we speak about trends investing, often people mention examples that are very sexy and they speak to the imagination a lot today. But those are often also the topics that are in a hype. The negative word of a trend can be a hype. That's what you see in this graph. You have a linear development and you have the orange line, what experts call the S-curve of innovation. That's often how new technologies develop. But you see in that beginning period to the left that the orange line is not as good yet as a normal linear development. So people overestimate the potential of something new in the beginning, and then it's a hype, and you pay a lot for companies that mention this topic because it sounds so, it's so much to the imagination. It speaks to the imagination, but the reality is not there yet. No earnings, we don't know the winner yet. And then the right of the graph, and that's also for us an important philosophical part, many companies and investors underestimate how successful a trend can be longer term. I'll give you one example. Who would have thought that Apple with their iPhones would have had high margins, 40, 50% margin on a small device for that many years? Who would have expected a company like Amazon to continue to grow by 30, 40, 50% for that long? That company is not at all new. Actually, when I was in university, and that is a long time ago, that was already a company starting to be founded. So the point here is to make, we focus on structural change. You have to take a long-term view and at the same time be very careful with some of the things that are too fantastic to be true. Because for us, we don't really care about the trends on their own. We care about the trends because they give us investment potential. And that is different than just a nice story. The story is important, but it needs to translate into real earnings. That is why we are buying these companies. So to me, this is what a trend really is. And now I'm going to explain a point quickly, but it's important. These trends are very long-term. I mentioned it. It cannot be underestimated. But within the trend also grows up. Just like a person, you mature. So in this case, for instance, the digital trend that we all know, it started when people were buying their first mobile phone, smartphone, hardware device, 10, 15 years ago. But if you would still invest only on that field, you would not make much profits because the trend of digitization grows up. So first it was about hardware, then people already had a smartphone. So you would look elsewhere, and companies became important that started to make money on advertising using that smartphone. So then we have companies that are today very famous, such as Alphabet, Google, and Facebook. And they started to make money because people first had bought their mobile phone. And now we are much more different topics. It is still digital, but it has been developing. And today many people speak about digital payments, even cryptocurrencies, even meal delivery, like in Latam you have Rappi, in countries like Colombia. Those type of developments, or that you buy many more products online. E-commerce, not new, but really impacted by COVID too. So my point here is, if we speak about trends, long-term, careful on the short term, but the trends also move in time or they grow up. And as a portfolio manager, we think it is our job to move along when the trend develops. If not, then your portfolio is good for last years, but not for the future. Yes, please, Federico.
I was looking the screen, the chart, and I was wondering when is the sweet spot for investing, no? For when a new trend arrives, and like a lot of hype, as you told us.
Yeah.
How do you determine when is the sweet spot for entering to a
Yeah.
kind of to investment?
Yeah, I'm not sure if there is like really one sweet spot, but there are some things that you need to take into account. For instance, if a trend is too young, it is too early. Often you find many companies that want to become successful. They want to become successful. So there's many companies, but they are also in fierce competition. They don't make any money. And then it's too early. And then there's this move where there's more transparency on which companies will be winning in a trend. And once we see that and we can analyze that, then for us, it is the sweet point. Because then we can identify not only that the trend is growing, but also which companies we should buy to benefit from the trend. So for us, the sweet point is when we see the winners emerge. And that is often not in the beginning. Remember social media like Facebook. There has been many companies wanting to become successful in social media. By now, we have only a few that are extremely dominant. And if you see that starting to play, those companies that can be dominant, other companies have already left the arena or even go bankrupt. That's the sweet spot. Good question.
Maybe to summarize, it's too risky when it's the boom, because then you have the burst, and
Yeah.
then the winners are led there, no?
Yes, exactly. And then the good point to make, then you still have many, many years to benefit.
Okay.
So for us, but that's a view, for us, it's sometimes even okay to be not the first one in a trend. We rather wait until we know which company can benefit from the trend and then invest in the trend. We can still stay with that trend for many years, because that was also on the earlier slide. The long term can benefit you for the very long term. E-commerce is not new, but it's still growing. That's a good example. So we think you wait until you see real monetization or real potential to make money. Now, if you have the time for it, because I enjoy this, I'm going to show a short movie. This is the point. So the trends develop longer term. It started from smartphones all the way into where we are today, how you use the smartphone. And I have a short movie. To the people listening in, please use your volume. Please put it up, the volume, because you need the sound, sonido. And please have a look at this video.
Curtains, lights, doors. It even unlocks my car. And the only one with access is me.
Yeah, just a funny movie, but I think it shows how we are now with the mobile phone, how we use it. Nobody could imagine this 15 years ago, but today it is there. And that's what we call structural change. And that was the first question by Federico. ¿Qué es una tendencia? Structural change.
Structural change. But the question was where the car was going, no? To the police station?
That's true, yeah.
Okay. Perfect with that answer. So continue with the trends. What kind of trends, are you seeing today? And I assume that the trends that you are seeing today, for sure they might change with the pandemic, no? Because for all of us that we live worldwide, our style change. And so how did it impact for you guys and your analysis now and before the pandemic?
Yeah. First, this slide very quickly, because it's a good framework before we go more into what we really do. We think if you identify trends, you can actually make a classification or organize them in groups. So we think there are trends that are determined by the change in technology. That's a very big group. Change in technology like robots, robotization, the change in DNA like we saw with the Pfizer vaccine too, digitization in general, like I mentioned, the smartphone. The group in total is technology changes. Then there's a second group, and that is quite different. It is more predictable, more slow growth, but still very important. And that is, for instance, changing socio-demographics. Change that come because we have many more old people in many countries, like in Europe or in China. Also because generational shifts, millennials like my children, they behave differently than people my age. And also the rise of the middle class that you find in many growing countries. And that's very important for consumers. So first group, transforming technology. Second group, changing in social demographics, which is more predictable because you have so much statistical data. If there's somebody going to be old, probably that person has already been born. So you know more clear the development, where in technology, things go often very quickly. And then preserving Earth, we are very much into sustainability as a company. And we think topics like climate are also a group of structural change strategies. So if I translate this framework, because this is very high level, if I translate that into the consumer strategy, we have identified 3 main long-term trends. Before I get to your question on COVID, the first one is the digital transformation. The second one, emerging middle class, more and more consumers in developing countries that have money enough to buy products. And then a third one, health and well-being. That can be more exercising, like my children exercise much more than I do. They also look better than I do, so they are much more healthy. My daughter, maybe this is not a good thing to mention in your country or Argentina, she's vegetarian. So yeah, but that's also a sign of the times. So these are 3 trends that we have identified. And now I come to your question on this change over the COVID period, because there was such an important development. Not really, but I need to explain that. So this is the topics that we invest in today that we find very interesting, based on the 3 long-term trends. And what we have always tried to do is create some balance. I don't know the real Spanish word for that, but at least to make a balanced approach. For instance, some of these trends already were there, not new, but they accelerated, they went extra fast in the COVID situation. For instance, change in payments. That's an interesting trend. Not new at all. People pay less with cash. They use mobile phones, they use credit cards, they use other ways of paying money. And the COVID situation has only increased that. In my country, if you would go to the supermarket and wanted to pay in cash, people did not like that anymore because it was less hygienic. So you pay with your mobile phone or your cards. So that's a structural trend that was really benefiting. Last year in 2020, it was a new trend, and not a new trend, but extra growing fast. Also people playing games, young people, games on their laptops, games on their mobile phone, tremendous growth because people were at home. They could not meet their friends. What else can you do? And they played a lot of games. Streaming media, watch Netflix, listen to music in Spotify. All those topics were already in the portfolio, but they benefited fantastic in 2020 because people had to go to those ways of spending time. But the point is, for us, we would not like to make a portfolio only of those trends. We liked the balance. So we also have topics like luxury goods. I'll come to speak about that more later, or much more defensive, healthy lifestyle, because the digital trends are often high growth. So we also need something that is more defensive, if you want that balance. So for us, did we really change much? Not even. We know we benefited from COVID, but we also want to have that balance, and that has always been in portfolio. I have to be a little bit honest here. I think we could have done more in the non-COVID parts. So the reopening, restaurants, drinks, we could have done more. So we have not done enough if I look at it today. But if you look at it longer term, this fund has been really strong. And if it's okay with you, Federico, I would like to explain a few trends, I think two, a little bit more in detail, because it shows what I mean about balance.
Sure.
And the first one is this one. And people know about this also in Latin America. Companies like Mercado Libre, Magazine Luiza, those type of companies. Of course, also Amazon is a big player. So what you see here, this is a long-term trend. People have been buying more and more online, and that was already happening for many years. You see that in the graph. Then we had the COVID lockdowns, and it went extra fast. You see that it was growing extra fast. And now we think it will continue to grow, but not as fast as in 2020. So this is a good example of a trend that was helped by the lockdowns, but is still very important. And it's not only about growth, it's also that people are willing to pay a membership. So you become a member of Amazon. You pay a few dollars per month to do that. And then the earnings of that company become more predictable, something we like a lot. And not only the large players like Amazon, but also companies like Nike or Lululemon, the famous yoga brand. Why did they do well when their shops were all closed? Why did those companies still perform well when the shops were closed in the lockdowns? Because they really developed very well their e-commerce relationship to the client. So these companies, they reach out directly to their customers. They don't not even need an Amazon. They go directly to the customer, taking higher margins. We love that too, higher margins. And a company like Shopify, that's the S to the right, is a company that's helping small companies make their own websites, do the payment, do the fulfillment, so the delivery of the products. And that's a company that's doing fantastically well, because by now everybody realizes that you need also to be in e-commerce as a shop. So this is a nice trend, high growth, very strong in COVID, but we think it will continue to be attractive. Not as fast as in 2020, of course not, but still good numbers. You had a question on this, Federico?
Yes, no, I would like to understand this chart, because what I see, let me know if I'm right. Before COVID, it was a growth rate. Then COVID was a crazy growth rate. And in the future, you see the growth rate higher than before the COVID, not the same.
True, that's true. And that's because many people who never did an e-commerce transaction, like older people, they have now done it. So they now know how it works. They feel more comfortable. And yes, indeed, there's more growth than before. That happens quite often. So yeah, again, my daughter, she was always buying e-commerce a lot. My wife and I, not much, but now we do more because we had to do it in the e-commerce times. So yes, that's correct.
It's in both sides. It's in the consumer and as well in the seller. No, in the shops now are putting all online.
Yeah. Yeah, and even more, also in the payment. Companies like PayPal or Adyen, I don't know if people know Adyen, but they're also in payments. And that is fantastically growing, because if you buy a product, of course you need to pay for it. Okay. And then there's a company that helps with the payment, and they get a fee on each payment, on the digital payment. So that's also part of this trend. So this is high growth and also higher valuations. It's a good point to make. These companies, they grow fast, but you have to pay because they're not cheap. And then we have another topic that we like. It's much more stable. And when I was actually in Carrasco in Montevideo, I saw that 2 people walking with dogs, like group 10 dogs, the outlet, how do you say that in good English, outlet service for the dog. I saw that in Carrasco quite often. This is what is a trend that has also been impacted by COVID, but it's actually a slow growing trend. Many more people have a pet, like a dog or a cat. My first Spanish word was el gato. So that's a word that really helped. So growth in the pet, let's say how many people have a pet dog, and people are willing to spend money on their dogs and cats, just like you do with your children. Because for many people, the pet is like a family member more and more. This is in the United States, this is in China, this is actually quite global. We really see a high penetration of pets and willingness to spend. And why is this relevant? Because you do not need the economy to grow very fast. And you can still make money in this because this is stable. This will not grow 30%, but maybe 8 or 9, but very predictable. And I even know people, and I think her name is Julieta, that also took a dog during the COVID times, because for many people it's also a way to socialize with a pet, and then it feels like a child. So for us, so just giving the example, the strategy should not only focus in very high growth areas. We do that, we like it, but it's not enough. You also need trends that are more stable. Because if the economy is not good, then this trend will still be there, where more aggressive trends have a difficult time. And we like that balance. Yeah. So for us, this is an important example. Yeah. Sure. I think this is already for your next question, because obviously we have prepared this. Yeah.
Yes. Another important pillar in your philosophy is stocks and those kind of investment.
Yeah.
Sometimes when you think on quality, it seems or lower return in the future, or a lot of control in risk management, or in summarize, boring. So, but I know that in the long run, it's not like that. So maybe if you can explain me, or explain us how it is the quality philosophy has an impact in the portfolio in the long run.
Yeah, well, we know from research, this is just an example. I show it 1 minute only, that quality companies can outperform in the equity market. Why is that? Because if people buy companies, they often also want to feel comfortable with a name that they know and trust. And often those are described as quality companies. For us, that is very important because we invest in trends. And trends can be hypey, and we spoke about that. And we really want to benefit from the trend as much as we can. And then we buy, for that reason, we buy the dominant company, the number 1 and 2 in their field. That makes sense because if the trend is indeed correct and it grows, the number 1 and 2, because they are dominant, they will make the most money. They are the biggest one, they benefit the most, and probably they can also have the best prices because they are dominant. So quality for us is not only because it works in general, which is true, but it also explains why is that company the number 1 or the number 2? Because they are better than other ones. That is quite simple. But then you need to think, what makes a company better than other ones? And here at the left bottom, you see some of the items we try to research. So for instance, what is their return on invested capital? How much pricing power do they have? Can they raise the prices if their commodity costs go up? Do they generate a lot of free cash flow? Because that can give you dividends, or they do share buybacks or more growth in the future. For us, it's very important because we know that's a view we have, and it's also academically proven that in the equity market, it is a selection of companies that makes most money. You see that in the United States too. Some companies have made all of the returns in the market. So you need to be very selective in which companies we buy. And it's our choice to buy dominant quality companies. This is always important. But also today, for instance, today people speak about inflation as a risk. That makes full sense. It makes inflation is a risk. And then you're happy if you have companies that have pricing power, because maybe their inputs, they become more expensive. But if they then, because they have the power, increase also their own prices, at least they still make enough money. A good example in our portfolio is Nestlé. And Nestlé is very well known, from George Clooney, the coffee and the water, and they have also a pet department. So that's a quality company. And they made clear 2 weeks ago on the earnings numbers that they could raise the prices because they are so dominant. If you have to compete by only low pricing, that makes you more weak. But if you can compete because you are the best one and the strongest one, then you can raise the price, which is probably important in this field. So with this, I think that's my explanation. Quality is always important, and here you find some characteristics. And in the end, you then have a portfolio of quality companies that most clients will know. Why do they know them? Because they are well-known number ones and twos.
They are the leaders.
Yeah, the leaders, yeah.
Good.
Yeah.
Talking about companies, I know that you bought in the past Netflix. Now it's so hard because of the pandemic, but you bought it one time before this. Can you explain us how the team, for example, did the investment thesis for incorporating Netflix? And if I'm not wrong, you incorporating when the price was rising, and sometimes it's difficult to buy a stock in that place.
Yeah. I have this slide for this question. We bought already Netflix in 2015. So that is 6-7 years ago, long time ago. And the stock has done really well. The stock has also been quite volatile. Why is it volatile? Because it's expensive. People buy Netflix because you think it's a great area, streaming media, and it will continue to grow. That was true. And in the COVID, it was even more true. So yes, many people signed up for a company like Netflix, but also Disney Plus, for instance. In the beginning, they were probably the only one. So we could know the winner. So if you believe in the trend and you know the winner, because at that point in time, there was basically only one, then it's relatively easy to buy such a company, except for that it's expensive. And especially with Netflix, this is relevant because almost every time when they publish numbers, earnings numbers, the stock can react quite fiercely. What I mean by that is because you expect it to grow for the future, if there is a disappointment, the stock can also fall 10% in one day. And if they beat expectations, it can also increase by 10% in one day. So quite volatile. For us, we are not nervous because we know the stock from the longer term. And it's important to have that. And a good point to make, and that's to the left bottom here, why do we like the dominant companies? And Netflix was very dominant because in streaming media, you need to invest loads of money into new content, new movies, new television series. That is very expensive. That is what you see here. They have to invest more than 20 billion only to make new material. But if you have the material, people will come to you and sign up, become a subscriber. And then that's the so-called flying wheel. If you add users, you have more money to spend to make more content. And because you have more content or nicer content, other users will also come to you. And then you have more money to spend. You can make more content and other people will come to you. So this explains that a company can continue to grow once they're already very dominant. Because you need that content and streaming media. So this is a good example of a global company. On the volatility, what I need to explain also just in one sentence, we often lower the weight. So if the stock is very successful, like Netflix has been in 2020, we keep it. but we know it's not cheap, so we take some profits. We sell a little bit. And that's why we are quite happy with the volatility, because it does not mean that we can always stay with the same weight. We can adjust the weight, but we would not sell the company because it is the dominant number one. So this is a good example of use the long term, maybe change the weight in the short term, but in the longer term, it's a great company and they are very dominant. And the fact that they are dominant keeps them dominant because the content investments. Is this an answer to your question, Federico?
Yes, really, really clear.
Yeah. Strong pricing power, that's also relevant. They can easily increase the price from $9 to 10. Would you then cancel your subscription in the States? Probably not, but it's an increase by 11%, easily. Not many companies can do that, Netflix can. So this is a nice long-term holding, although it's volatile. Yeah.
Really, really interesting. And continue with this kind of investment. And a rule for many investors is if you tell a success story, you have to tell us a not so success story. So, and it goes with this. I know that in your portfolio you have some change in trends, and interesting to know to let when a trend change or finish, or how you see that.
Yeah.
And of course, how you react to that.
Yeah. This year, if I have to explain, but that is your question, something that we did wrong or not good, and we adjusted, it's actually about the topic of China. And I give some examples on companies too, but it's more general. It's actually China as a big story. And that has changed during this year. So China is a good topic. I'll go a little bit more quick on these slides. What happened in China for us that was new? Well, actually, a couple of months ago, every day there was new news on extra regulation. So the China government, with all their power, they came with new regulation almost every day. That could be about education. It could be about data. It could be about companies that are too big. They are too dominant and they abuse their power. It can be about children playing games all the time, which the government does not like because they think it's bad for children to play games all the time. That makes sense too, right? And it can also be about that in China, some people were very rich, very, very rich. You would almost say filthy rich. And then the government says, but we also need more equality, because otherwise it's unfair and we might also have social unrest if this continues. So a lot of things happened on the regulatory side, and it impacted many companies. So what we did in the portfolio, and this is the worst example, is the company that we had, Tel Education. It's an education company. Children or teenagers can go to this company and follow courses and study extra, which is very important in China because it's so competitive. We had bought that stock not even that long ago. And then during the year, the China government became very strict on regulation for these companies. And that actually meant, that was your question, the trend of online tutoring or education online was more or less not attractive anymore. People can still do it, but these companies, they were not even allowed to make enough money. The government said you can do it, but you cannot make that much money. So what we had to do, we had to sell it as soon as possible, because we know the structural driver of the trend is suddenly gone. And we sold it. Now with hindsight, we are still happy in a way, because we sold it around 50, the price of $50 US. Today it's below 10. So it was a very tough decision to sell it because we were taking a loss, but that's not that important, because sometimes you have to do that. We had to sell because the business case was totally gone. And they cannot make easy money anymore like they used to do. So this is a very terrible example of where your investment case looks strong, but then changes in this case because of the China government with regulation.
And it's impressive how quickly, no?
Yes, but we would have been, okay, thank you. It's impressive, but with hindsight, I would have preferred not to have bought it. That's also true. It was a bad investment by us, but luckily we were quick enough to sell it to avoid the worst, because many investors have the worst, and then the price is very low. So if I generalize that, because it was not only about one stock, it was China in general, we have really lowered the China weight. We are still in China, but we only have 4 companies left, Quattro. Those are the number ones. So in gaming, we still have Tencent, but we don't have NetEase anymore. In e-commerce, we still have Alibaba, but we do not have Pinduoduo or JD.com anymore. So we limited China and said we only want the biggest one. Because for us, we think those big ones are so big that the government will need to work with them too. And in China, we consider very important that the companies can work with the government, because you have no choice. It's not like my country where we don't really, I mean, the government is there, but it's not that powerful because we are a democracy and things to change take time. But in China, it's not a democracy, so things go very quick. So the companies need to also service the government and not be enemies with the government, because you might lose if you start a battle with the government. So for us, we lower China. Maybe interesting to mention, we still like the emerging consumer trend in Asia. There's many young people that have become richer and have good salaries, so they are strong consumers, but they're also outside of China. So we look for exposure outside of China and less in China itself at the moment. One point I would like to mention, because it's different than what I said, we are more careful with China. I mentioned it, it's more cautious, but for luxury brands such as LVMH or Kering with the Gucci brand, that was also impacted by the China government, because the China government suddenly said, we like something, they call it common prosperity. Everybody needs to be developing well, everybody needs to be rich enough. The middle class is also important, and not only the very, very rich Chinese people. So in the past, the very rich were very eager to show how successful they have been, to buy the most expensive cognacs, the most expensive handbags. That we think will stop. And when that came in the market, those luxury companies like Richemont and LVMH fell 15% in one day only. They fell 15% in one day. And we saw that as an opportunity to buy a luxury company extra. We bought one. So we are more cautious for China, but for luxury, we bought a company, the company Richemont, that is with the Cartier watches, for instance. We bought it because we saw it as an opportunity to buy into that correction. Because for us, it is actually not that important that the very rich people buy the products. It's much more important that the middle class has enough money to buy luxury items. And maybe they are not going to buy a handbag of $10,000, but they can still buy one of $3,000, which is still a lot of money. But there's more people that can buy that. And that's what we believe in, the growth of middle class. So for China, that's one of the tough topics this year, probably the toughest. We made adjustments. Some are positive, and some of them we just had to say, okay, this was wrong, let's leave. Yeah.
Right. Coming back to your investment in TAL Education, I know that it was a bad investment, but for me that shows how important it is to have a team that understand the trend and understand how it can guide, as in this case, no? So because of or a regulation in this case, or something external that changed that trend from the heart, and it's not always easy to sell with a losing position so quickly.
Yeah, that's a good point. Thank you for that. It's not easy to sell a losing position, but if you're rational, you sometimes need to do it. something I didn't mention, but it's quite interesting. As Robeco, we also have people, local Chinese people in Hong Kong and Shanghai. So we're not only with the Dutch people, but we also have people there, and especially in China, that is very important because it's quite difficult to really understand what they say unless you are there and you are local.
Yes.
So we need that too, but we have that.
That's another added value of this kind of firm. Good.
Yeah, I think so. Yeah.
And coming back to some stores that you told us, for example, Netflix, Mercado Libre, and those growth stocks, they continue growing and they are expensive. I would like you to ask, like in our time, that the markets are in all-time high. For common investors, it's quite difficult to keep adding positions or to keep investing when the market is still rising.
Yeah.
And the valuations seems to be like high or expensive. But in the other hand, there's people that says that okay, but people always, but the markets don't keep in all-time highs most of the time. So how do you manage this kind of situation in Robeco so we can learn from you guys?
Yeah. Well, I think we must agree that the markets are expensive, but it also, for some reason, it also makes sense because interest rates have been very low for many years. So there's not much alternative than to buy equities. Maybe in LATAM this is easier, but in Europe, if you have money, you put it on the bank, you have to pay a fine to the bank to put the money in the bank. So you have to pay them for your money. It's unbelievable, but this happens. So many investors, they buy equities because they have no choice. Otherwise you have to pay a fine just for having the money. That's also not much fun. So we understand that there's a lot of demand for equities. And the good thing is also that earnings growth coming out of the lockdown, COVID situation, has been very strong. So the market is expensive, but at the same time, at least the growth is also there. So that's a positive then. But suppose you don't have a view on the market, because I'm not negative on the market, but suppose you have no view. Then what you can do, that's what we do. We try to diversify between those stocks that are expensive. Can we explain why they are expensive? Because some stocks you can never buy cheap. You can wait, but you will wait until you're very old and you'll still not be cheap. So sometimes you just have to buy something because it's more expensive. Easy example, if you buy a car, a Porsche is also more expensive than a Toyota. So that's just the price of it. Sometimes you have to pay that. And that's a little bit explained to the left top. But more important, in a portfolio, you don't buy just one company, you buy more. And then you have balance again, diversification. So we know in our portfolio, we have some stocks that are very expensive. Stocks like Zoom is very expensive. Stock like Square, that's a very good one, but it's also not cheap at all. And then you go to more companies that have been there much longer, they grow less fast, and that also explains that they are cheaper. So in a portfolio, you would need to think about this and create also a balance again between valuations. But if I say that, I must admit that a strategy like us, which is growth oriented and quality, you have to pay for those stocks. Yes, of course you can find a cheap stock, but why is it cheap? Maybe because it's not such a good company. So for us, we cannot really escape the valuation of the market. And then we look for diversification. You know what they always tell people that have a lot of cash, and I think that is actually true. The biggest risk is that you're not in the market. Because the market on average has always grown. So the risk is for people that always say, I want to wait for the correction. And then it comes and it's maybe just a brief period. They buy the dip, but still it's difficult to wait for that moment. The best dip was there last year in March because of the COVID situation. And you saw how quickly that already recovered. So there, you have to be very, very genius or lucky to buy exactly at that dip. So our answer is, please do not try to buy the dip only, because you don't know when it will be there. And you might have already waited too long. And so our answer is diversification and be the long-term investor, a really long-term investor.
Another thing that I like that you said is to understand why they are expensive and believe on that explanation. No?
Yeah, true. You need to be able to explain why it's expensive, because if you cannot explain it, then it probably does not make any sense. And then you have a hype, or you're just paying way too much because everybody's buying that stock without research. But if you research it, you can find reasons why the valuation is as it is.
And tell me, what kind of investment horizon is recommended for this kind of investment that we're talking about?
Yeah, well, it's equity. So I would always surely say 5-year horizon you need. Not that you have to have the fund for 5 years or a company for 5 years, but you need to be able to invest with money that you do not need in the meantime. So I would say 5 years. Then you can still change the weights like we do with, like we mentioned, Netflix, but the horizon needs to be 5 years. Otherwise, I think it's better to have your money just in cash, although then, yeah, that's also giving no return. So I would say 5 years. And the reason I also mentioned this is, I'll come back to this slide, but let me first show you the long term. If you have a strategy like this, which is diversified, and we think with good quality in it, you can outperform if the markets are positive. That's what you see to the left, but you don't know when that will be. You can also have negative markets, a bear month, the month is going down. If the markets are negative, we will also go down. But the data show, this is 10-year data, that if the market goes down, we also go down, but less so, a little bit less. And then you have reduced the downside. If you add it together, on average equities do grow, you outperform in growing markets, you lose a little bit less when the markets are negative, but they can be negative, then you have great performance. This strategy has outperformed global equity by 9% per year, annualized, over the last 5 years. So that is very strong. That is including this year, in which we actually are disappointing. Now, then the question is, of course, my last statement, what about, sorry, I go back here. What about the expectations for next year? Let's say the shorter term. You need a long term, but suppose you would still ask, okay, but I have the long term, but why would I buy? Is it interesting today? And we believe it can be, because the central banks will start to taper, which means that there will be less liquidity in the market. That is bad for equity investors, but actually good for our style, because then the economic growth will slow down. It will still be a good economic growth, but not as high as it was this year, because this year was extreme in economic growth. It was also extreme because last year was so bad, because we were in lockdowns and recessions. So it's very logical that this year we have great economic growth, but that is because you come from a very bad period. If that becomes more neutral, and the central banks will need to support this because of inflation worries, then the economic growth will still be positive, but not extremely positive. And then it becomes more scarce. And if economic growth is scarce, investors, that's what they have always done, and we believe that. If economic growth is scarce, investors will buy those companies that can still grow. Because in a huge economic climate, everybody can grow. There's so much of it, everybody can grow. But if there's less economic growth, only the dominant companies, only the quality companies really know how to grow. And the poor ones, suddenly they are not helped by the environment. So we think it looks pretty good going into 2022, because growth quality companies can start to outperform again. Where in the beginning of this year, that didn't happen. It was more cyclical stocks that outperformed. And we think if we are at peak growth, we have seen the highest of the growth already, then our style can do better than we did in the beginning of this year. Because this year is a tough year for us. And then we think and we hope that next year will be better because we have seen the highest growth already. We are peak growth, and that is actually positive for us. That is the short term. But I would advise your clients and you and people like you, but I know you know this very well. You like to see a nice short term, but you actually buy for the long term. And to me, that is 5 years or longer. Please do not invest money if you need the money next year. That is just stupid.
Rule of thumb. Okay, and Ed, some questions that are arriving. Thank you very much for your presentation, really clear. One is, the two are really similar. How does it fit in this kind of trends and hype and not and leaders regarding the Tesla, no? All the Tesla movement that we see.
Yeah. That's a tough question. Not because I don't know the
and
answer.
The other one is tougher.
Oh, okay. Thank you. Well, I was planning to come to Uruguay in next year, but maybe I need to reconsider. But well, I'll still come because when you are in summer, I'll come to Punta del Este actually in February, so that will be great fun. But come to the question. Sorry, stock like Tesla. Why do I find this a tough question? Because we never invested in Tesla. We never did, and the reason is, but we are wrong so far. If you look the stock price, yeah, this is a company that has done very successful in the market. So we missed it. But on the other hand, is it a stock for us? We don't really think so, because it has always been very expensive. The issues on operational excellence are there. We think they are challenged on operational issues. We know they have great visionary people like Elon Musk, but he's also a little bit strange. And that can be a risk. This sounds very simple, but it's important for us because the company is determined by what he says on a daily basis. So for us, we missed it, but it would also not be a stock that we could easily buy because we thought it's too high. And I mentioned in the beginning, when do you start a trend? When do we invest in a trend? That was Federico's question. When we know the clear winner, we will buy it. We know when we know. But in, let's say, autonomous driving or even electrical vehicles, to be fair, we don't know the winner yet. And maybe it's Tesla, but it can also be Volkswagen or Mercedes or a company that we don't even know. I think in Europe, Volkswagen is now selling more electrical cars than Tesla. But that's also why Tesla wants to come to Europe to make the cars here. So to summarize this, we missed the stock. We never invested it. And if you look at the returns, we should have invested. But I also know how we think. And it never really fitted how we think. So we never bought it. And for me, that makes sense. We like growth companies, but Tesla was just too much of fantasy for us. But we were wrong so far.
But you can't win all.
No, and the stock is very volatile. So I think this month it's up again a lot, but yesterday it fell like 20%. Yeah, it's just very difficult, but it's not for us because we don't know. We like the trend of electrification very clearly. It's a good trend. Even autonomous driving, we would say, is a good future trend, but we don't know which companies will win it. And if we then look at the size of Tesla compared to other companies, yeah, are we willing to pay that much? We have not been willing to pay that much.
Good.
Then the tougher question.
And the tougher question that always show up, cryptocurrency, Bitcoin.
Yeah. Now I can be clear on that one. It's actually not a tough question for us. We do believe in the technology, clearly. Blockchain and even decentralized finance. Maybe that's a little bit difficult, but we do believe in it. But we do not invest into cryptocurrencies directly. We don't. because we are not allowed to. That's one reason. And secondly, which cryptocurrency would you then buy? That's also quite unknown. We do like the technological possibilities with it. So we are very interested. Robeco also has a fintech fund, not this one, but another one. And that does also not invest in cryptos, but it does invest in companies that benefit from the trading or the settlement of cryptocurrencies. And that's a good business area, actually, because so many people are buying cryptocurrencies. The companies that help with that, they are making money anyhow. If the crypto goes up or it goes down, it doesn't matter to them. They make money anyhow. The more it moves, the better it is. So we do that. So that would be the indirect way to benefit from cryptos. Apart from that, it's more longer term. And again, it's not really in this strategy, although, but that's a detail. We have companies like Square, and it's a great successful company. Square as a company, they have been buying cryptos or Bitcoins. We have PayPal. PayPal makes possible that you settle cryptocurrencies via their digital wallet. So we have some companies with a link to the topic, but it's a small part of the company and not the reason for us to buy it. Directly into cryptocurrencies, we believe in it, but we don't really invest directly in the currencies, only in the trading and the settlement of it. If your client is really interested in this, we can send you an article, but it's not an easy article, on decentralized finance. I can ask Julieta to send that to you. It's interesting for a client that's really interested into this topic. But it's not so easy to explain that in 2 minutes. So I rather send the article for the client that's really interested. Yeah.
We have time for our last question.
Okay.
Why do you invest in markets like China with the political risk it has, knowing that the US equity is performing so well? Is it worth the risk?
Yeah, good. Yeah, that's a good point. Our portfolio is also 70%, 70% in US. So most of it is very much US. Today we spoke about China a lot because it's such a tough topic. So I agree with the person who asks the question. It's a tough question. So China, we have only, I think, 7%, and US 70, 10 times as much. Is it worth it? Yes, we think, because valuations are much cheaper. And we know that the number one companies, in our view, will remain the number one. But we have sold all the number twos. We only have the number ones. So I agree with the person who asked the question. We are much more cautious for China. Is it worth it? Yes, because it's always important to sometimes not be carried away by the market sentiment in the short term. And today, China's sentiment is actually okay. Today, 2 months ago, it was very negative. And analysts, even serious people, were saying China is uninvestable. You cannot do that. It's really stupid to buy China. That was 2 months ago. Today, you don't hear that anymore. Who's here to tell us that 2 months from now, maybe, or 3, China's sentiment will be quite different again? Because it has always been very volatile. The US sentiment has always been strong, always. And we think it will continue to be strong. And that's why we have 70% in the US.
Right. And for finishing, let me switch to Spanish for a conclusion.
Gracias.
Bueno, la verdad que muy interesante todo lo que hemos escuchado de Ed. Gracias, Julieta, por hacer esto posible. Como les comenté al principio, la estrategia de la que está hablando Ed está incorporada en la estrategia de crecimiento y bueno, nos ha dado muy buenos resultados, pero siempre recordarles lo importante que es entender un poco lo que estamos hablando, las ideas que por más buenas que sean, tienen que encajar en el perfil de inversión de cada uno de ustedes, ¿no? O sea, porque es la única manera de que tengan un portafolio bien hecho a medida, en el cual ustedes se sientan cómodos el día de mañana con la volatilidad y con los resultados que esto ofrezca. Así que siempre lo importante es hablar con su asesor, recordar el perfil, el horizonte temporal. Como nos decía Ed, es importante que en el corto plazo haya, como quien dice, un dulce, algo interesante, pero siempre hay que hacerlo sabiendo que uno lo hace para el largo plazo, ¿verdad? Así que el horizonte temporal es algo muy importante, y también un poco la capacidad y la necesidad que tiene cada inversor a su manera de asumir riesgos. Así que bueno, como siempre, les recomendamos hablar todo esto con su asesor financiero, ver un poco de qué manera encajan estas ideas muy interesantes en sus portafolios, y bueno, para así poder tener un portafolio bien hecho a medida, y que bueno, cuando vengan la volatilidad estemos todos tranquilos y sepamos el horizonte de inversión. Así que bueno, a todos los que presentes, muchas gracias. Muchas gracias a ti,
Fede.
Julieta.
Gracias, y bueno, espero que les haya servido. Creo que es importante escuchar las tendencias, lo que viene, cómo estar posicionados, cómo estar ayornados a lo que está pasando en el mercado, y tratar, como dice Fede, de buscar las mejores soluciones para sus clientes con portafolios donde ustedes se sientan cómodos, que lo puedan explicar, que entiendan el rational, por qué se hace de cierta manera. Entonces creo que bueno, creo que fue bastante instructiva la charla.
Muy buena. Thank you very much again.
Thank you very much. Hope to see you
for
in
your
the next year.
patience and for your clarity. You were really clear. It's a lot of information that we really appreciate.
Y
Thank
otra
you.
cosa para comentar, nosotros tenemos en Robeco muchísimos white papers que no tienen nada que ver con los fondos, sino de temas. Por ejemplo, electric vehicles, el tema de cryptocurrency, de consumo, de mascotas, que muchas veces es súper interesante leerlo para entender más del tema, y esto les puede servir para todo en general. Así que dispuestos a compartir todo el material con ustedes.
Bueno, muchas gracias. Gracias a todos.
Yeah. Adios. Yeah.
Hasta luego.